It's a good afternoon to you. You're live at the Johannesburg Stock Exchange. My name is Arabile Kumete. As we get straight into this market picture, then again, it's another day of red, pretty much matching with my tie, I suppose, for today. It does seem that negativity continues to filter through into the market. The big story might even be the tech stocks getting quite a hammering overnight, particularly out in the United States, and then early this morning out in Asia as well, with even the likes of Tencent getting quite hurt. Xiaomi, the chip maker and semiconductor out in the Chinese nation, also getting hampered, unfortunately, earlier on today. And this all comes after the United States' SEC decided then to perhaps hold back on allowing the listing of any Chinese tech companies onto US stock exchanges. And that would then mean that you get no more money perhaps flowing back into China somewhat, and they would need to adhere to all US regulations and even detail any government affiliations that those companies might have in order to remain on any US stock exchange. So that has certainly hurt quite a few tech shares, and that was officially then put into place then yesterday. How much that continues to hurt the tech shares, which have of course been the staple for growth in the market last year particularly, will certainly be a key question, and whether that will be turned around in any way by the Biden-Harris administration will be quite interesting to find out. Let's take a look exactly at these numbers and what exactly has happened across the last 24 hours or so. Really today, for the most part, the Hang Seng is down, just inching lower there, losing nearly 19 points in the early morning trading picture. The Shanghai Composite is the biggest loser there, 0.1% down, but it was a good day though for the Hang Seng, which managed to go 1.4% higher there. The Nikkei particularly, should I say, out in Japan. It's red all across the European market though. We're seeing a 0.2% drop with the CAC 40 out in France. Negativity across that lunchtime trading picture there. Speaking of lunchtime trading pictures in the red, so too are we, just around 1/3% weaker. In fact, just above that 65,000 point mark. We had hoped that perhaps markets were going on a rally that would perhaps bring the JSE All Share to a 70,000 point mark. Of course, that still would have been a record in itself, which it did touch in terms of records pretty recently. But whether it continues in the same vein is not looking very likely at present. You do have financials having gone up 0.4%, with the banking counters leading that surge there. The listed property is also a little bit higher there, just over 0.1%. Industrials taking a bit of a hammering. Let's remember then, of course, that Tencent out in Asia gets hammered then, and with a significant portion of Tencent being owned then by Naspers here in South Africa, it does mean that Naspers will also get quite hurt as well. Naspers is part of that industrials counter, so it is down 0.8%, and you can tell why. It's a big chunk of that industrial counter. In fact, it's still a big chunk of the JSE overall, and perhaps another split might even be coming at some stage, and they will consider what to do on that front. Resources also down 0.2%. In terms of companies that have gone higher today, Attack has gone a little bit higher, 6.87%, helping the property stocks inch up today. Kumba Iron Ore is also nearly 4% to the good. It's still trading just below that 590 Rand a share price mark, with Lighthouse Capital also just around 4% there too. Sun International is unfortunately lingering, going down 4.2% today. We have THL and Cashbuild, as well as TFG, sitting in red territory in this afternoon trading picture, so not looking good over there. In terms of the commodities picture, while Brent crude oil has gone down 1.5%, we've continued to see it languish. At some point, it looked like it was headed towards $70 a barrel. That has faded away. Again, more issues around demand being the key element of discussion. Plus, you're seeing out in the Suez Canal perhaps some question marks then around a shipment of oil that has been halted, which is going to cost quite a bit on a daily basis, almost $10 billion on a daily basis, in terms of being able to pump more fuel out of that area. Of course, it's a key transportation area, that Suez Canal area, and it unfortunately is hurting things quite a bit, with the Brent crude price going down 1.5%. Pretty mixed picture across the main resources there, platinum and gold. Onto the resource front though, on the currency front, should I say, on the locally, the Rand is doing slightly better than against the US dollar, around 0.5% or so at 14.88. Let's remember we did get that positive number when it comes to the interest rates, rather the inflation number yesterday. The interest rates decision locally will then be made a little bit later on today, 3 p.m. The South African Reserve Bank governor is expected to share his thoughts on what exactly is going to happen when it comes to that interest rate data. With the euro, more than 0.5% lost there as well, but locally doing better on that by that similar mark, 17.58, 20.41 then for a British pound. All right then, let's have a chat as we get into this market. Gerbrand Smith from NEFG joins us now to unpack this market picture just a little bit more. Gerbrand, thank you so much for the time. Very quickly, sitting in the red here, are we? Risk off is definitely one of the elements, but that tech share slump and the SEC out in the US hurting things, that's going to be a big problem for a while.
Yeah, look, there was rumors a while back as well where they wanted to suspend some of these listings, and I think it's a problem where if a company actually needs capital and needs to do some raising, that's a bit of an issue. But at the end of the day, if it's listed in the US or it's listed in China, if it's a well-capitalized company and the earnings are decent, the share prices will follow earnings over time. There is this trade war between the two biggest economies in the world, and we've all been aware of that for 2 or 3 years, and this is one part of how they're dealing with it at the moment, and they certainly are heading towards some tech kind of war at the moment, and everybody is trying to be the biggest and the most dominant on a global context. So yeah, it's not the greatest news, but I don't think it's anything new. And if you look at what the figures and the numbers were out from Tencent yesterday, they were actually very amazing numbers. Actually, the P's come down from 48p to about a 30p multiple. It's not cheap yet, and you saw some re-rating on some of the tech stocks with about 20% pullback. But yeah, I think most of them are still looking better than what Tesla and some of the American expensive companies are looking at the moment. So it will be interesting to see how it plays out. But I'll certainly rather be a holder of Tencent than I will be a holder of Tesla, which is a US company.
Where does one then hide their money in a time like this, Gerbrand, where you see the tech stocks, which were effectively the best place to sort of put your money last year in 2020, this year getting a bit of a hammering? Do you go back into the cyclical stocks?
Yeah, look, I think that the right way of looking at these are valuations, and it's always been the same calculation. So we've avoided tech stocks for the last 2 years, and you saw the benefits from that only in the last 2 to 3 months, and they're down, and you probably didn't make money over the last 2 years now on most of them. Then on the other side, you sit with South African stocks, which has been deeply discounted for quite some time, and I think that's where you should have been over the last year, and you're probably going to get the benefits over the next 4 to 5 years out of that. So even our local banks are on P multiples and price-to-book multiples that we haven't seen in many years. And they're well capitalized. And yeah, I think some of the financial stocks in a global context, if you see interest rates rising, is also not a bad bet if you need global money allocation.
A slight pullback we've seen also on the local front, though, and not necessarily dropping down, but recovering somewhat from what has been a global slump. Is that company specific, and what areas have sort of been looked at to perhaps push the market a little bit higher at some stage, or perhaps not fall by as much?
Yeah, look, I think we had a healthy pullback, as we said earlier. Most of our stocks are 10 to 15% down in the last 2 to 3 weeks. The market's down, I think, 5 or 6 or 7% at the moment. So it's healthy. After you had a huge run, we actually had a great year. Even if you take out before COVID until now, I think the market's done more than 20% from January last year until now. So a bit of a breather, is nothing wrong with that. But if you look at P valuations, we still sit at decent valuations of 10, 11, 12 and decent companies against the American market that has 35 P multiples for decent companies. So I think we're still okay. Cash is not an option anymore. You're earning 3.6 or 3.8% on money markets for the next 12 months, where interest rates are at the moment. And you still pay tax on that. So I certainly think stocks will be the beneficiary of asset allocation for the next year or two. And you should do okay if
Yeah.
you have your money in well-priced stocks on the local market.
Very, 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 very quickly then, Gerbrand. Interest rates decision today, cut, keep things on hold, particularly considering inflation number from yesterday.
Yeah, I think he's probably going to keep it on hold. There was some of the people making the decisions were actually hoping for a cut, but I just think they're going to be fewer, and we're going to have no cut, and we'll have no interest rate change today. They'll probably look at something end of next year, changing to a bit of a higher stance if you see inflation coming through.
Wow. Lower for longer is what we certainly are hoping for, and that seems to be the consensus then, the interest rates remaining perhaps the same for some time to come. Gerbrand Smith from NEFG joining us then as we unpack that market picture. Thank you so much for joining us this afternoon. Really appreciate your time. So that interest rates decision by the South African Reserve Bank coming up at 3 p.m. Governor Lesetja Kganyago said to lay out the lay of the land. How much impact will inflation have on future projections? And exactly what does he think of growth? 3.6 was his last estimate. Will it be higher for 2021? All of that coming up at 3 p.m. For now, though, my colleagues, of course, are standing by.